Good weekend, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for the weekend of Friday, and it's your weekend edition. We'll look at weekly charts. And this is the 2nd of June, 2023. Well, the combination of getting the debt deal done, this debt ceiling deal done, a big positive. And notice we didn't go to default. And notice it's always at the last hours. Please remember this event. My whole life, this is how it's been every time we get to one of these debt ceiling deals. It's very rare that everybody agrees. There are a few occasions, don't get me wrong. They're far and few between. The parties fight. Remember what I told you. It's all about TV time. And especially if you're in front of an election year, watch out because everybody does their job to see where they're going to be with it. The other event, and the big one, was the report today that came out on payrolls, and this is non-farm payrolls. The big number was 339,000, a blowout number by any standard you want to look at. But the unemployment rate went up. We'll talk about that in just a second here. And that's what, by the way, helped cause a melt up in the stock markets. And the non-farm payrolls even went up further, another roughly 40,000 in April. So you kept, by the way, the unemployment rate. If you take a look, the April was unchanged. And then you take a look at all the numbers for May. You added in the private sector. Government payroll swelled by 30,000. You take a look at the participation rate. It's staying where it's been. You can see that the costs went up a fraction, just a fraction, but not on the yearly. They're down a tenth. So here's what the market focused on. Oh, the year over year is down a tenth. That's a problem for the market. The unemployment rate went up. That's very bad. That means the Fed's going to not do anything about raising a rate in June. Okay, why? You then get over here, details of the household survey. There's two surveys, the business service survey and the household. The household is not typically the important survey. It's door to door. You got participation that's nowhere near as big as the other one. But when you're looking for that diamond in the rough, you find reasons. And it showed people entering the labor force had a hard time finding a job. There's also an increase in previously employed persons who found themselves what? They found themselves unemployed suddenly. So you put this through it and they go, uh-oh, this isn't good. And the business survey, of course, painted a picture of just strength, beating estimates for the 14th straight month, by the way. Wages among workers who aren't in management roles, that's very important, which make up the vast majority of the labor force. You know that that's the case. Well, it rose 0.5% in this report, the most in 6 months. You don't want to pay attention to that. Why? Because the naysayers will have you believe all the way through that what they want is the Fed to stop raising rates. It's going to put the economy into a recession, and that could be a very bad thing. My question is, how? When you have a labor this strong, I mean, the headline number is what I go by. That's the amount of people getting work. You'll tell me, well, at this little part, it's weakening, that little part. But the bigger picture is the business survey, and everybody's got it. It's not what the market paid attention to. But it's a story that is very mixed. While the stock market roared, that is not what took place in bonds and notes. They added yield. What else happened is they added yield. The dollar took off again breaching the 104 mark. They put the euro down on that type of news. The gold market down $25. Again, the combination of higher interest rates, agreed, and a strong dollar. That's a bad headwind. Silver market down 24 cents. Copper up, but that's because China is rolling out plans and feelers as to what it's going to do for the property market. Now, I don't know that the property market's going to get China out of its problem. It's got to get its citizens to spend. After COVID, what they did is they didn't spend. In the grain markets, a big up move on the upside. You know, this is how it's going to be every weekend. You're going to have big moves Fridays, up or down typically, depending on what the weather pattern through the weekend looks like. Speaking of weather, Hurricane Arlene, the first seriously named storm, that's there. It's not expected to make rainfall, but the rain impact in Florida might be severe. And talking about that, you've got to look at the heat we have in Philadelphia, Vermont, other areas there in the 90s. What you're not hearing is it's going to be in the 50s and 60s tomorrow. So a spike up and then down. That's why natural gas did not explode on that type of news. All right. So as we take a look at the S&P, you have been staying on a monthly basis over the 18-month moving average of closes, which is the red line. That gives you a bullish bias. So far for this month, with today's stellar gain, whoa, you're up 2.33%. When we go to a weekly chart of closes, look how this market is now hanging right in there. It's doing very, very well. It's back up against the old high of 42.81. You do see that. So that's an important number as well. Bias up. And you can see how the market has moved to the upside. Now, when we take a look at the swing lines, they joined into the bullishness today. Today just carried a rising tide, carries all those ships up. Higher lows, higher highs, no question there. You're over the 18-week average. You're over the the 100-week average as well. So where's the resistance going to be? It's going to be at the Bollinger Band. That number's a bit higher at 43.12. It'll probably climb a little bit during the week as well. But expect that the market has some problems. You heard me the word problems. Between here, the 100-week average, and the upper Bollinger Band. Buying it up over a Bollinger Band this week, do as you want. I would advise my clients to actually be liquidating something on that and buying on breaks. Why buying on breaks? Because you have an embedded reading. And with embedded readings, it's when the red and the blue line, they're called a K and a D. The difference in the formula is one uses in a weekly chart 3 weeks of data, the other 5. Now, I modify my readings in a very certain way for my subscribers of my research. I have found what I thought was a better way to do it. And I promise you, I ran it by the gentleman who's no longer with us, George Lane, many, many years ago, with my findings. And he thought it was pretty interesting. He said he loves the fact that somebody actually is doing something like that. But I tied together slow stochastics with all of the rest of this, and I think I've come up with an interesting play. When you have an embedded reading, it means the market is converted from overbought to locked in. When you're over the 18-week average, you're only looking for buy signals to begin with, and you're always looking at the Bollinger Band because you only stay over it or under it 5% of the time. Very important. When I come to the Dow, I don't see a trend. I see a market with a higher high, lower low, and getting into an area of overbought. My definition of overbought is any reading in the slow stochastic here that is over 70. That's where you're at. I heard today people saying, the only two markets that aren't there to go into have to be the Dow and the Russell. Well, there's a reason they've been laggards, but what that means is people are capitulating. And they're saying, God, I can't get into the S&P and the NASDAQ. They've moved out on me, so I'm just going to step into the other indices because they have to follow suit. That was what was said. I'm not convinced I'm in that camp. We all know about the NASDAQ. We know why it's rising. We know that it's artificial intelligence. And we know that it's the big event now for the next decade. Yeah, next decade. So you'll hear talk about it galore. But to buy over a Bollinger Band, to buy without getting a break on a weekly chart, I'll let somebody else do that. I want to wait for my opportunity on pullbacks, and they always come to try to come into the market. You are sitting here between the upper Bollinger Band and the 100-week average. I'm guessing that if you're a true bull market during the summer, this summer, the 18-week should cross over that number if it's a true bull. If it doesn't and you start rolling the other way, that means you're going to give up this embedded reading. It'll get under 79 and you got a correction on your hands. In the Russell, what did I just say? This is the other one that traders will go after. So until this week's low is taken out, you have an outside week up and you closed over the 18-week average. The bulls have grabbed control of the market. If they're going to do anything with it, the potential, if people are right that you got to jump on these, is all the way up here in the 1965 area. The risk is back under today's low of 1738.50, and the support number probably going to come in around the 18-week average, but very quietly, people aren't mentioning that the 200-week average for resistance is 1843. It's got to prove it can get up and stay over that number before it goes anywhere. Then we get to the bonds and the notes. Now, are you in the camp that the Fed is going to stop? If you're in that camp, well, then maybe you're going to get a rally out of this. If you're in the camp, as I still am, that the Fed should go 25 basis points more, they haven't proven to me that the inflation has fallen, and I am not focusing on the household survey. I am focusing, as we always do, always have done, the headline number. The household survey, other than this 1 week, when's the last time we got that much press on the household survey? Again, the naysayers will look for every single thing and say, okay, folks, here's a reason not to go. Do I think the Fed should stop the battle right here? No. Why? They got a stock market on a tear to the upside. They got people. The big number is people are getting employed. This is when you keep going. You back off when everything starts going the other way on you and you let the gravity of it take over. If you back off now and you get another strong jobs report, well, then you'll say, oh, they got to go back in. Why go back in? Why not just finish the job up and then go to the skip or pause? The one thing nobody is saying, forget the idea that this Fed has any ammunition to pivot to the downside. It isn't there. It's not going to be there in the next 6 months. The best you can hope for is that the Fed sits still. The recession, how deep can it be if everybody's got jobs like this? And I know you're going to tell me unemployment went to 3.7%. I do agree. That's the one thing I, too, am looking at. I'm not blind. I do look at it. When we come to the 10-year note, same thing. Not a trend, but back into the downside bias. The dollar index staying strong, not overbought. Potential could be to the 105.40 area. That's a pretty big run at that point in time. And in the euro, if the dollar's strong, this is the mirror image, the flip-flop, because 40% of the dollar is made up of this. So this goes weaker. That's what takes place. In the Canadian dollar, you are caught in a sideways market with an upside bias until the market gets back underneath 73.26. Momentum up, bias up, trend up. Got to take that out to take me on a weekly chart and say, no, you don't want to be long. Possible potential, 75.35 area there. Japanese yen, I am still very much in the bear camp. And no, what I think you're going to do here is I think you're going to get what I call that gorilla glue trade, where the market gets down, lays down on the Bollinger Band, and stays like that. Doesn't close under it, get consecutive closes. Plays the hand that I told you. The Bank of Japan has said that they might have to intervene if you get weak. Markets like to test banks to see what they're going to do. In Bitcoin, you fell all the way back for support at a combination of the 200-week average and the 18-week, you held it. You're not trending, but you held the support. You've worked out of an overbought condition as well. Will this catch fire or not? I can't tell you from that chart. Then we get to the Brent versus WTI oil. Okay, we have the OPEC meeting this week. Are we going to be able to go anywhere with that meeting is the question. There are two schools of thought. One of them is saying, as you heard the energy minister from Saudi Arabia, don't be short. The threat that they are going to cut production by maybe another 1 million barrels a day. Then the other thing that we get the energy minister out of Russia going, there's not going to be any cuts in production. Which way do you want to go with that? I don't know. I'll take a look at what they do and play it after the fact. Do you have a trend going into the report? You do not. You have a higher high, lower low. That's not a trend. Same thing in WTI, sitting back. Gasoline entered a downtrend. Downtrend? Yeah. It peaked out against the 100-week average. And if you watched me every day during the week, I showed you. It was buy the rumor, sell the fact into Memorial Day. Now we have to find out how much gasoline was used. We'll get all these numbers now out of the next series of reports this week when we get API and EIA. We'll get a pretty good feel for what's there. Are we building? Are we going to pull out to replenish supplies? What's going on? But trend is still down until you get back up and over last week's high. So you put it together, you come up with game plans, and I have a game plan for you. Let me give you the simple game plan. This is our free offer page on our website. It scrolls down and there's many free offers. When you go to it, it's at iraepstein.com. You just check off which ones you want. Couldn't be easier for you. Your form will come up with your email address and your name. That's it. Now we know where to send it. You'll get everything from there. So to get to this page, you either go to our website at iraepstein.com or move your cursor up here. You'll see an icon appear. Give it a click and away you go. I'm Ira. Let's hear what the president has to say. It's a victory lap for him and the Democrats. They got through an event, but it's also for the Republicans. Of course, you already are going to hear in the weeks to come, maybe next week, that certain Republicans will want the head and the speakership taken away from Speaker of the House, McCarthy. But that's more politics. We'll hear much more about that. You have a great weekend. I'll see you Monday morning.